Hello, everybody. Welcome to today's event. This is Andrew Wilkinson with Interactive Brokers, and I'm joined on this call by Xiaolin Chen, who's the head of international at KraneShares in London. Xiaolin, a huge welcome back to the program. How are you?
Very well. Thank you for having me again, Andrew.
Always a pleasure. So we're going to talk about Chinese stock markets, and the Shanghai Composite is up by about 5% or so to begin 2026, while trading volumes set a record at the start of the week. What's behind the current bout of enthusiasm for Chinese shares?
I think the Chinese New Year wish come true quicker than everyone expects it. We have a say of your Christmas wish. This is probably Chinese New Year wish. It's clearly a results from last year's policies, announcements, and monetary supports from the governments to say the fundings to support technology, AI innovation, and so on and so forth. Right at the beginning of Open in 2026, we see a few companies hit the market around those industries in AI, in technology, in large language models, so on and so forth. Investors are thinking and believing that the trend is happening in China. Maybe now they see reality. So market is really reacting to such quick developments of piled up companies, in China that they due for IPOs for years. Now the doors start to open. You see investors that waited on the sideline to say, what else is under the leaf from the Chinese market? These are coming. So investors get encouraged by the newcomers to the market. One, second, materializing and capitalizing of the industries that supported from top down now start to show and start to bring to the public market to allow retail investors to access to those markets. And third, which is more important, China's really start to catching up with the US, with developed market to say, you know what, we have our own AI companies all around in the different layers of the AI model.
There's a couple of things I'm going to dig into with you in a moment, AI and then the IPO market, which you just referenced, both of those there. But first of all, let's take a little step back. How about the recent China's recent macroeconomic policy shift? How has it impacted both domestic growth and global economic dynamics?
That's a great question. I think you rightly point out China is an emerging country, still emerging market. Policy matters the most. You want to know what's the direction the government is taking this country to. And the very recent important policy events is called this 15th five-year plan. So you almost think of every 5 year, this government make a plan for the country. And this is the 15th five-year plan. In the plan, very clearly, they focusing on 2 or 3 key themes only. One, consumer. They have the most is people. So they say, how am I going to help these people? One, creating more wealth for them. And so they feel more comfortable to spend, continue to support their lifestyle. So number one theme from the policy top down is consumer power returns. They want to help consumer generate wealth, continue to support the e-commerce companies, so on and so forth. That's number one. Number two, AI technology sufficiency in all aspects of technology front. So that's the second part of the policy. And the third is most important is obviously they focusing on how they can do and continue to lead on the cutting edge slightly, to that. And they also need to be mindful with their aging population. But the technology can answer the aging population by doing more automation, having more robots to do lower paid job and free people to move up the ladder. So you would see policy continue to stay very much accommodative, period. The focus, most part, I say 80% of the policy is focusing on domestic, how to help the people, how to generate wealth. And the remaining percentage of the policy focus would be how to continue to deal with uncertainties around the globe. They want to work with the people. They want to interact, bring the technology to overseas, so on and so forth. So you're going to see very accommodative or even more constructive talk from the Chinese policymaker to the outside world, including United States. With the trade talk and other initiative, you're going to, from China's perspective, definitely you're expecting more constructive dialogue and more constructive outcome.
What I find
Mhm.
really fascinating about the rally and the stock market, the resumption of appeal for Chinese companies, is that this seems to have completely put the problems with real estate on the back burner. No, nobody's talking about that anymore. Why is that?
Two things. One is China on overall, the household are not very leveraged. So yes, there is consolidation. There is a psychological level of consolidation. But market to market is different, Andrew, from 2008. 2008, we gone through that market. You have a mark to market down. You have a real pain of carrying a negative equity in your household, in your real estate. In China, such situation didn't happen because of the rally over the years, even certain level of corrections, it didn't really hurt them to carry a negative equity. And then they also not hugely leveraged. So real estate is slightly consolidated in a way. It corrected the market. It rallied so much. It also corrected the momentum for the investors believe real estate is forever going to be the key driver of China's growth. Now, after 3 years of consolidation, the settlements, the dust start to settle. People realizing this is not going to be the engine to generate my wealth. I may as well look at opportunities elsewhere in technology, in new IPOs, in all the other areas. And also the household continue to have good job market. China's job market is quite stable, continue to be stable. So these are really, I call them the sovereign, the consolidate period has been completed. And then they move on. It's a good thing about emerging market is they move on quickly. They want on the next trending opportunity rather than say cry to the history. They think this is actually creates next opportunity.
So, Xiaolin, let's bring it back to artificial intelligence. What's the current outlook in China for AI?
It's a very spring term, let's call them. It's a very spring time in China. The reason I call them that way is China was late to the AI game. Everyone knows it, right? The IP design, the chip, the most advanced chip, they were late to that game. But they were not late to realizing this is important. This is important for their society. So what China is focusing on is open source and, most important, commercializing AI. Okay? Yes, they have double the energy than the United States. That's your foundation layer to support AI. They don't have the chip. Well, not as advanced as NVIDIA's chip. They do have the chips enough to commercialize the AI usage, apply the AI in real life and commercialize them quickly. They put in the robots into hotel. They put in the robots that speaks any language on you. Okay? A robot in the hotel lobby, walking around very nicely, cutely, walking to a customer welcome. You start speaking your own language and the robot speak with you any language without a second doubt.
Wow.
Imagine standing there on concierge for 24 hours. Nobody can do that. Speak any language you can, right? So that's what they are trying to use. And say, you know what? We put them into logistic places. We discussed this before. Last year, China delivered 140 billion parcels, 10 to 12 billion parcels a month. No, any country can deliver that without automation. And they put those robots, automation into those places, hotel, restaurants, and then home care places. China has this single child policy, and they put all these AI robots into those places to say, you know what, just talk to them. You know, they have a very funny social video says there's a robot in the home care, and all the lady maintain the robots has to wipe off the cases. They talk to them. They have a hug from every single lady's man. So they talk to them. So the companions, okay, the momentum value is there, is very high. So China is focusing on how to commercialize AI, how to use them, how to making out of a profits. Like investors saying, yes, AI chip infrastructure, we're buying a lot of storage, and you got to feel it. You want to feel it in real life. I think China is focusing on feeling it in real life. But investing in AI is an interesting thing. Today, you can discuss, I can invest a lot, but next year, I really think it's this year, 2026, it's really the humanoid robots going to catch the most of the eyes because they put them into all the, even I bet you've seen this already, the CES show this year. I see a giant robots are cleaning the toilets with the toilet brush. And then you see a lot of the robots are, walking in the hospital, trying to carry patients from one place to another. So all these like humanoid AI tech, AI overall leaders, not only just producing the robots itself, everyone along the supply chain with, the brain, the sensor, the skin, everything, it will be a winner along those lines.
Fascinating stuff. We mentioned the IPO market earlier on.
Yeah.
Let's turn to Hong Kong. It seems to be particularly healthy at this point in time. What's happening? What's driving the growth in IPOs in Hong Kong?
2 or 3 years, the IPO market nearly halted in China because you remember during pandemic and after pandemic, the economy is trying to recover. A lot of the company chose to back off and wait and see. If any news, remember those periods, if any news is bad news for Chinese company, the company say, you know what, we better wait. And then this is exactly that. I think I read a research report a few weeks back saying that there's give or take nearly 180 unicorns, Chinese unicorns in China today that are market cap around $1 billion and above dollar, okay, have 5 years track record and it's not IPO. Those are the traditional classic, you would just go IPO, okay, and they are not IPO'd. Okay, so you can imagine the pipeline that continue to come from the Chinese equities is very healthy. So you use the word healthy, it's exactly spot on. And in Hong Kong, it's really now in the orderly manner that these companies are slowly, gradually come to the market. This year, you already seen a few large language model like Minimax, also Biren, who is a local Hong Kong, chip maker. They call them equivalent NVIDIA in Hong Kong. All these companies slowly come to market. But we don't suggest investors to go individually on the name. The volatility can be too massive for anyone to digest, for anyone to stomach that volatility. We do suggest basket approach to access this market in technology in China. And then the IPO market continue to be healthy. According to the source, they say there's at least 200 to 300 applicants in the pipeline in Hong Kong market, including mainland, to continue to come to IPO in 2026. It's the big brothers. They have other line of business revenue to support the business on top. They have the AI technology. They producing the chip. Alibaba is invested in Minimax, 14%. You have some kind of cushion to protect you, but you also accessing that market. That is exactly the entire ecosystem of a robot fund. If you want to own a robot today, you say, hey, who is the owner? There's no one, leader, like a dominator in robot world. No, there's a segments of different players that they play different segments to assemble the entire robot to be possible. You want to own their entire ecosystem, and Coit owns their entire ecosystem.
Xiaolin, let's turn to trade. Obviously, it was a strange year given what was coming out of the White House in 2025, and it's probably going to continue. But how has Chinese manufacturers expanded in other areas of the world in response?
That is another very great question because it faced a massive challenge for Chinese manufacturers in 2025. When April comes suddenly in 2025, voila, we're going to bet on each other on the tax. One thing I have to say is very positive is both sides sit down, okay, and now talk more constructively. Chinese manufacturers are better prepared in Trump 2.0 than 1.0. So the exports did get impact, not like no impact, did get impact, but they quite could go back to the resilient level quite quickly. Clearly, their exports to other countries, namely in the ASEAN frontier and Europe, has shot up. And that is an effort over the last 10 years of China trying to rebalancing, or diversify its trading partner. But I think US and China are still going to be the largest trading partner, in the world for a very long period of time.
Xiaolin Chen, Head of International at KraneShares in London. Thank you again for joining me.
Thank you.
And thanks to the audience. And don't forget, if you enjoyed today's episode, remember to like and subscribe wherever you download your podcast from. Bye for now.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice. IPO investments carry substantial risks, including extreme price volatility, limited operating history, lack of liquidity, potential for significant losses, and uncertainty regarding future performance. Any discussion or mention of an ETF is not to be construed as recommendation, promotion, or solicitation. All investors should review and consider associated investment risks, charges, and expenses of the investment company or fund prior to investing. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice.